come back and take a look at what the global markets are up to. And Shreyansi, let's start with the US handover because muted move coming in, but in the green nonetheless.
Absolutely, that sums it up. But then, when you take a look at Dow Jones futures, then you're looking at similar moves coming in across futures actually. So just about 0.1% advance coming in for the futures. But then when you look at the moves, muted but winning day on Wall Street largely because you did have the Dow climbing about 140 points. You do have the Nasdaq that added close to about 0.2%, similar moves coming in from S&P 500 as well. So that largely is what you saw as well when you look at markets. Now, of course, there was a little bit of a data set coming in that was in focus. So you did have the job opening and labor turnover data that came out on Tuesday morning, also known as JOLTS, and that showed 8.059 million vacancies in April, the lowest level in more than 3 years. So that was an important data set coming in, and it was also well in below the 8.4 million consensus forecast that was previously being penciled in. Now, the next notable set of data, of course, comes in the form of the ADP data on Wednesday morning US time. And traders will also be monitoring data on services and manufacturing purchasing also due on Wednesday. And then, of course, you have numbers on Thursday and Fridays, all important May jobs data as well. So that will be in focus in the market. And on the earnings front, you do have discount retailer Dollar Tree as well as athleisure company Lululemon that will be reporting its numbers as well. So those would be important to watch out for. When you look at Europe, then European markets closed lower. So if you're looking at a stock 600 or a DAX, those are the kind of moves that you saw when you take a look at Europe as well. So, Snehi, that largely is the handover coming in internationally.
All right, well, that's the handover coming in internationally. When we talk about Indian bonds, they have the 10-year treasury yield that also spiked up above 7 yesterday. But let's also talk about another commodity in focus, and that is oil, because oil prices eased in early trade yesterday, extending their losses from the previous session when prices fell to their lowest in 4 months as investors worried about supply ticking up later in the year. Brent crude futures fell 20 cents or almost 0.3% at $78.16 a barrel. Brent closed below $80 for a barrel for the first time since the 7th of February after falling more than 3% on Monday. So continued to build upon those losses. That's what the Brent was up to yesterday. Brent fell for the 6th straight session, lowest in 4 months amid concerns that the global supply could increase later this year. Now, US WTI crude futures also the east 17 cents or 0.2% to $75 a barrel. It had also settled near a 4-month low on Monday after sliding more than 3.5%. Now, remember, the Organization of Petrol Exporting Countries, which is the OPEC, and allies led by Russia, together known as OPEC Plus, on Sunday agreed to extend most of their oil output cuts into 2025, but they've also left room for voluntary cuts from 8 members to be gradually unwound from October onwards. The signs of weakening demand growth have also weighed on oil prices in recent months, with data on US fuel consumption in focus. Now, the average gasoline price in the United States declined 5.8 cents per gallon to $3.50 per gallon on Monday. The US government will release inventory and product supplied data today as well. And product supplied, which is considered a proxy for demand, will show how much gasoline was consumed around the Memorial Day weekend, the start to the US driving season. So lots in focus when it comes to both of these indices. You have Brent as well as WTI continue to build on losses that we've been seeing over the last couple of sessions here.
Well, absolutely, and it does look like the OPEC Plus has left the bearish genie out of the bottle. So that is what we've seen play out. But on to some more global updates then. We're eyeing this morning. Job openings in the United States have fallen more than expected to the lowest in more than 3 years. Signs that the labor market is softening to aid the Federal Reserve's fight against inflation. Job openings were down to 96,000 to 8.059 million in April. This is, remember, the lowest since February 2021.
Alright, shifting focus then, car maker Toyota will recall over 100,000 SUVs and pickup trucks in the United States over engine failures. The recall includes some Toyota Tundra pickup trucks and Lexus LX600 SUVs equipped with the Japanese automaker's V35A 6-cylinder engine.
Alright, then, and staying with the auto space, Ford has reported an 11% growth in sales for the month of May on a year-on-year basis, largely aided by a robust demand for SUVs, pickup trucks and hybrid vehicles. And demand for crossover SUVs and pickup trucks has also helped US automakers post stronger sales over the past few years as Americans prefer the flexibility offered by those vehicles.
If you like this video, then like, share and subscribe to ET Now.